Welcome to the Twyla Zone podcast, a space where we explore the depths of empowerment, resilience, and transformation. I'm your host, Twyla Garrett, and I'm thrilled to embark on this journey with you. So whether you're seeking inspiration, guidance, or simply a moment of reflection, welcome to the Twyla Zone podcast, where empowerment meets transformation, and every story has the potential to ignite change. Let's embark on this journey together. Are you ready? Let's dive in.
Everyone, thank you for joining in today. This is the Twyla Zone, and I am Twyla Garrett. I am here today, and I'm so excited because one of the things that we're going to discuss today is how to demystify insurance. I have one of my best friends, but also one of the best agents I know out there that's going to be able to tell you everything you need to know about insurance. His name is Avon White. We have a 24-year relationship.
Wow.
It's been an amazing journey, Avon, and I'm so excited to have you on here today. I think one of the biggest things that I want to do is make sure the world understands the need for you, the need for people in your field, and how us in the Black community are affected by the lack of insurance and insurance. So I want to turn it over to Avon so he can introduce himself. And again, thank you and welcome to the Twyla Zone podcast. Avon, tell us about you.
Well, thank you so much for having me join you on this podcast. It is quite exciting. I tell you to use our technology then to reach out to so many people, diverse in background, and let them know what they need to understand or add to their understanding. And thank you again, Twyla. And you said we've been acquainted 22 years. That's a long time. And you don't look a bit over 25. So you must have been a baby.
I was a baby.
Age too. And again, I've been in this industry for 4 decades. And when I think of that, I go, wow, what am I doing? But yes, insurance, what a word. They've tried to call it other things, but insurance works.
It does. It does. So, Avon, what we're going to do today is I want to go all the way back, right? I want to go all the way back about how you got into this business. You know, a lot of people, and this is around career opportunities. I want you to talk about how you got into the business of insurance and how has it affected your life.
Wow, that's a great question. And I must say it was by accident, an affiliate, an associate of mine, a good friend, introduced me to the opportunity. He had started his career in the business, and my immediate response was, I don't want any parts of insurance. You know, I'm going to be a music and band director, you know, which was still integral in my life. But as time went on and I saw his economics appear to improve himself, I said, hey, about that career position. And so fast forward to today, the career in what's known as financial services is quite broad, very robust. People of every ethnicity, all genders are definitely needed in the field of financial services, which includes insurance. And so here we are.
How do you get in it? If you are graduating, can you get in as young as 18? Do you have to be 40, 30? What's the deal? How do you get in it?
Well, there certainly are some requirements, and age in most state areas is a smaller part of the requirement, somewhere around 20 or 21. As a matter of fact, I've been working with a new recruit who is just a year or so out of college herself, and has already served us well and been to many programs and many understudies. So you would be recruited or talk to any bank, really, or insurance company or brokerage house. And I'm sure they can give you their pathway to how you will become a professional in their industry. And then after getting in, it's sort of like military in a way. You get to specialize. That is what I mean. You know,
okay.
There's a boot camp. It is rigorous. Some people, if you don't want to study after your college or whatever other studies you've done, you don't want to get into financial services because you will be studying all the time.
Okay. All right. And so, you know, for our Gen Zs and some of our millennials, they're going to always ask, what's the money? What's the dollars? How does it look? Is it lucrative? Is it not? You know, can I be my own business and set my own hours? I don't want to work for anybody. How does that go?
Well, that's beautiful. Part of the industry is, yes, there is a point that many of the financial professionals strive to, and it doesn't take that long to be what we would call your own business owners. But yes, the as far as financially, I saw, and I'm trying to think of the periodical, it listed that financial advisors or planners, and let's give it, they have completed at least 1 year in the industry. And in the East Coast, their income level ranges from $80,000 to $135,000
Wow.
a year.
Wow.
And that's with, certain fringe bonuses and different things that corporations offer. But it's quite an industry because everything we do in this great country of ours evolves around finances and economics in some form.
It does. I'm an accountant, so
That's
I
right.
100% agree.
That's it. And when we think of insurance, we think of a good raw working definition. Insurance is a protection type of industry. It's based on what actuaries call the law of large numbers. That is, large groups of people or entities sharing in what we call the risk and indemnifying, protecting each other from losing or whatever they might tend to lose in such a risk. That's insurance in general. And now with the calculation tools of AI and all these wonderful algorithms, they have cut the calculations really down to a good science. And the only thing that's sort of, I won't say muddying the waters, is catastrophes that have happened. They seem to be a little more frequent at times.
Oh, yeah. Mother Nature and global warming, which they think doesn't exist, truly seeming to show its face.
It's showing its face. And then we have the era of low interest rates yielding. That is, again, impacting some of what insurance companies have to calculate for themselves after receiving premiums from hundreds and thousands of people. They have to try to invest those premiums within certain protection guidelines or conservative guidelines and make a return on that premium, hopefully before we have a lot of catastrophic losses, so to be able to pay those claims. So that's the general concept of insurance. It's a type of protection, and it utilizes the law of large numbers. And what we are trying to convey over to our marketplace is that we are here to help you take care of a risk. And people say, what's a risk? Well, it's the potential for something adversely that would happen. What's the risk of slipping and falling and breaking your ankle on a snowy day? The risk goes up higher, of course. What is the risk of a potential? We just had a disruptive firefights, the fires everywhere.
Yes.
So insurance companies and their actuaries and so forth attempt to calculate that. And you as an individual or a corporate seeks then to say, well, I'm going to avoid that risk if you can avoid it altogether, or I'm going to mitigate that risk, try to soften it up or share in that risk, or I'm going to pay out of my pocket. So it's money is going to be involved. Either I'm going to pay out of my pocket, or I'm going to get my insurance carrier to help me recoup some of my catastrophic losses.
Now let's talk about, so I want to go into our community because I think this is something that has to be said. A lot of times in our inner city, especially how I grew up and where I grew up, a lot of people didn't have insurance, right? A lot of people was on Medicare, Medi-Cal. If anything, you might have some car insurance. We're going to talk business on the second half of this podcast, but I really want to make sure that people that's listening and people that are watching understand how vital insurance are. So I'm going to ask a couple of questions. I want you to give me some answers. How young can you be to have an insurance policy put out on you?
Oh, my goodness. And many companies, several weeks old.
Okay. So babies, in some cases, are insured.
Yes. After they have usually successfully been delivered and they are over 15 days old in many cases, yes, that child can be insured with most carriers.
Now, how old can you be in order for a policy to be taken out on you?
Well, according to some advertisements on TV, they'll think you're at 85 and almost blind. But
yeah, that's true. Now, is that true? So for people, I'm glad you said that, because some people might think that that's a gimmick and that it's a show. Is that something real?
That is something real. It is something very real. You can, at a senior or an advanced age, up into the 80s. I don't know what that top end is. I don't think it's past 84, 85 generally.
Okay.
There are exceptions one can put together, but where one could obtain what we call life insurance. And as you can tell by the very title of it, life, if you're 85, how much more life would you anticipate having? So versus that little child who was only 1 month old. So yes, those types of policies are available. They have certain types of restrictions. Some have that. Some have waiting periods for a couple of years. Some have refunds of premiums. So there are ways to get insurance at that, senior age.
I have a question. Can I take a policy out on someone without them knowing it?
No. Well, the answer is yes and no, you cannot. That is not legal with most, we call underwriting in most insurance companies. A person, the insured, there are three parts or three entities in that contract. There's the insured, there's the owner, and of course, there's the company itself. So the insured and the owner, in a lot of cases, most cases, are the same. One is the same. But where the owner is different than the insured, and the insured is an adult, that adult has to attest or sign off saying, I'm okay with this. And then the underwriting still has a question or two as to why are you someone not related? Why do you have insurance? Why are you seeking insurance? What would you lose in this transaction should that happen? That's not saying that the answer is no, you can't have it. It's just that those questions and situations have to be addressed.
Is there a good sweet spot in age, just on the personal side, where someone should look into life insurance? Is there I know you did. Now, let me just speak on my behalf. I met Avon. I was in my late 20s, going into my 30s, and I had already started a business. And the business was doing quite successful in my regards, right? It wasn't what it ended up being, which was quite successful. But Avon, I remember when I brought him in, he was to insure my home. I had just built a home. I needed my house to be insured. He set me down and he realized immediately the first question he asked is, what do you do? And when I told him, I'm a business owner, I'm an entrepreneur, I'm running a business. And I remember Avon went back to the drawing board and he came back and crafted a policy around a little bit, not only about my house, but what I needed from a business standpoint. And we're going to talk about that in the second half of this, but also what I needed to make sure personally, in the event something happened to me, what my assets be covered enough to be able to either be paid off if something on my demise, or would it be able to go to my family to keep them whole? So is there a sweet spot? I did it at almost 30 with you, and I'm so proud of that because I'm still reaping the benefits of those policies that you put me in today. But is there a sweet spot for the listeners that might be entrepreneurs starting a business, or they're out just leaving the home with their parents, or they're going back home with their parents, right? They might be 30, moving back in with mom and dad. What would you say is that sweet spot to start to really get serious about looking at their portfolio of insurance?
Well, that is the question. Well, what one might call the sweet spot might be that potential point in time which they are at an age and a physical situation, a physical stamina to which the insurance carriers say, oh, that's very little risk or not much risk on the part of the insurance company to absorb that. And I would say, looking back there over the years, I'd say anywhere from age 18, 17, because you're young. And I would say probably to age 59 or 60.
Oh, wow. Okay.
Yeah, that now that's not saying some questions will be addressed, but the answers to those questions we call underwriting will probably be in the favor of that potentially insured person. And I remember hearing something along the way. I've had great mentors and veterans who trained me, and one of them made a comment once, and I had to stop him. And he says, "You don't buy insurance with your money." I says, "What do you mean?" He says, "Well, you pay for it, your premium with your money. You buy life insurance with yourself." I said, "What do you mean?" He said, "You buy it according to your health, because if your health has crossed a certain line of insurability, then no one hardly will insure you. I don't care what your age is."
Yeah.
I have seen that play out.
And what about recklessness? What if you are a daredevil, sky jumper, Evel Knievel type dude on the bike? I mean, how does that work? Do you have to stop your passion, your career to get insured?
Not really, but there are, again, I said, some questions depending on the amount of coverage sought by the individual. And what you're speaking of are social lifestyles, that they have hobbies, avocations. And based upon their fences, yes, you can be a skydiver. That's your weekend passion, or every so often. But then the questions may come to play. Well, how often do you do this activity? Are you trained? Are you certified? A scuba diver? You can have these other types of lifestyle. You don't have to sit around the house all day in an incubated bubble. So enjoy yourself. But just know that those questions will be addressed, because what the insurance carrier is trying to measure is the likelihood that a claim would have to be paid perhaps much sooner than anticipated. It can happen. We can ask every question which can be favorable, but we're trying to, again, mitigate, reduce that risk going in, the potential for that risk. So yes, you could be, if you are a race car driver and you're driving for NASCAR, you better, hopefully your mama got your insurance when you was just 10 years old. Because those questions, again, and what happens also in the case of someone that has these other hobbies and things that they do to entertain themselves that are a little bit more risky, is that you may be covered, and maybe your premium, the cost of that insurance, well, let's say these companies may say, we're going to add a surcharge to this because you're taking a little more risk than the average 30-year-old. So, skiing, that won't stop you. I know you love to ski, water ski, jet ski, everything. But if you're doing that competitively, then we're going to ask, are you trained? How fast are you traveling?
How fast are you going? Right.
Yeah. So insurance, and as you mentioned to me earlier about demystifying, certainly the thousands of trained professionals, and they're trained not to sell, but they are trained now to understand and to mitigate that potential risk with the client, helping the client first understand, hey, you do have some potential, you have a risk. You cannot insure everything. It's like,
okay, that's good to hear.
Attorney said, you can't legislate or they attempt to, everything in a will or a trust. You can't cover but the major spots. And so that's what the insurance professional, and now even in the era of where financial planning is really taking off, so to speak, where people who did not think they needed to plan are realizing, I need to do a little bit more planning than just writing my budget in a budget book.
Oh, absolutely. I have a group of women I talked to last week, and they're in the styling, braiding salon category. And I'm going to bring you over because I'm going to be doing a boot camp and listen out here, folks. I have the Twyla Garrett Success Academy coming, but I'm going to be doing something for the braideries and the hair salon and barber shops, because one of the things I realize is that right now, especially braiders. You don't have to be licensed. You can grab a whole bunch of money, but they have no coverage. They have no coverage. They don't understand insurance. They don't even have health insurance, Avon. So, we need to understand how to set these companies up the right way so they can benefit in the future with some of the things that needs to happen, not just on the company side, but even on the personal side. Because I asked them, I said, well, do you have insurance? No. Well, what happens? I just go to the Minute Clinic, or I'll go, to Patient First. And I'm like, wait a minute. We have to be able to get these individuals. If you're braiding the hair and getting $300 a head, and you're doing 3 or 4 a day, you have money to get insurance. You have money to protect yourself and structure yourself the right way, both personally and business. Now, I'm going to shift. I really want to talk about your property, right? Because insurance, because we're going to go the whole gamut. We're going from what you need in your life. We just talked about that. Let's talk about property, because I know there's several people, I'm an adjuster. I'm an insurance adjuster, been licensed for years. And it's so sad when we have catastrophes that I go to people's homes and they're underinsured. And here's my gripe with the insurance agent. And I'm saying it because I want you to address this. Sometimes you didn't do this with me, but I know many of people this is done for, especially when I'm out on a catastrophe. They say, I haven't seen my agent in years, and I had this pool for the last 5 years, and it's not on this policy. Therefore, I can't pay for it because you didn't know. So we're going to talk about home insurance, and I want to talk about do you really need it? If you own a home, let's talk of 2 scenarios. When you have a mortgage, you got to have it, right? You have no choice. The mortgage company forces you to have coverage. But when you are, say, someone that's established and paid off their mortgage, and you have no debt on your mortgage at all, and you have no mortgage, you can self-insure, right? You don't have to have a policy. Sure. But talk about the danger of that and what home insurance is there to do for you. And then shift it about contents, because people don't understand certain things got to be scheduled, listed, included, added before you even can get coverage. So start there.
You are really hitting into it, Twyla.
We're going to demystify. I told you. We had to demystify.
But that's great. One should have that discussion about their property insurance. And you mentioned something that's quite relevant, and that is that when you have a mortgage, then the bank makes sure you have insurance. Ask yourself why. Because the bank is assuming the risk.
That's right.
The risk to them financially is that you won't be a good mortgage person. You won't pay it off. You won't pay your mortgage.
Or it might catch fire, burn down, and there's nothing there to pay to build it back up.
That's it. They have went on the risk for the $500,000 property, and they want to know that should, the tornadoes that we spoke of earlier that touched down all over the USA here lately, should come by and engulf your house or anything else, that $500,000 property is covered for the bank's benefit. So why shouldn't it be covered for yours? So that's the purpose. And those types of policies, better known as homeowners, have parts to it. And you mentioned the fact that there's often stated by many or too many people who own houses and in policies, well, I haven't seen my agent since I started it. Maybe I didn't even see my agent then. It was all done over Zoom or whatever.
That's right.
And that's okay to start it that way. But having been in this industry and even in management for a large number of years, all the carriers are really pushing reps, agents, and so forth. Contact your people.
Exactly.
You don't have to sit down every year with them, but contact them. If they were good when you put the policy together, they may be even better now. Maybe they had 2 cars in a house when you met them, and now they've got 4 cars. Well, of course, they let you know about the auto because, again, you can't get your car without the insurance unless you pay for it cash from a private owner or something. And the reason being because the person selling it won't have any more vested interest in that property. So homeowners, most important. A lot of Americans have homes and houses, and even renters
Yeah.
You don't hear much about it.
Talk about renter insurance.
It's not a fancy product. It's not one that perhaps generates a lot of revenue per se for the professional. But think of it. The person that's renting now, and apartment rents are quite high all over the country.
That's right.
You know, he or she is still that either entrepreneur or professional that's going somewhere in life, and they have property, they have contents. I heard this explained. I got all these little adages. You know, think of your contents this way. If you could imagine lifting your roof off your house or apartment, turning it upside down, everything that falls is your contents.
That's right. Anything that's not drilled to those walls and fixed to that wall is considered property and contents. And I think even, I'm going to stay real quick on renters. I think people don't realize I have corporate apartment, and our corporate apartment requires it. It's in a very nice neighborhood. It requires it, right? But I know so many, and I'm a landlord. I require it. My tenants must have it. But I know so many landlords. I don't care what economic bracket you are in renting, whether it's high end, low end, middle end, they don't require their tenants to get it. And you don't know what you don't know, right? So I tell all my friends who are in, they're like, Twyla, you got all these doors, but every year we require it and we also validate it. So one of the things we found out that a lot of our tenants started lying to us, and they was like, well, we just gonna go in and go into PDF and copy the old one and change the dates. Well, as a landlord, you need to validate that policy is really a policy. So we have someone that calls, verifies it's there, and every 6 months we do a check to make sure you still paid the bill in order to make sure you have coverage. And keep in mind, it's not for me. As the landlord, if the building burns down, I got insurance to put the building back and the walls and everything else. What will not be put back is your content. And I've had people, friends of mine, who say, my God, this tenant is going crazy because we caught a fire and they lost everything and they don't have anywhere to go and anything to do. And what they need to know is that insurance policy that might only cost you $200 a year would go put you up in a hotel, help get you fed, and help you find another residence if needed, if you cannot get back to your own facility. So it is vital. I mean, Avon is absolutely right. People are, it's so sad that a lot of the people, especially in the inner city, don't even understand that, don't realize that. And I would say here's another thing. If you are Section 8 homes or housing, you better require the fact that they have renter's insurance. And the reason why is because people are now smoking in properties. You got very loose laws in, the 420 rules in several different states where people are smoking on balconies and possibly setting things on fire. Yes. And if you're in Section 8, you want to make sure your stuff is covered.
And not withholding just Section 8, but even in the other markets for renters, the landlord has a reason to mitigate, to request and require insurance. Because one, that means you got a more responsible tenant.
That's right.
That's it. Secondly, that policy, the tenant now has a liability clause in it, generally for $100,000 up, should that tenant do something that causes the fire or the damage or the smoke to burn your property, and theirs also, and this creates a good economic community when there is that insurance. And so the client is definitely shortchanging themselves when they think they're going to skid around having insurance, which may be, like you said, $200 or $300 a year, when you really can't eat out a month without paying $300 there.
That's right.
So understand, again, I think demystifying insurance without getting into all of the product nuances is one of understanding that insurance is deferred money. It's money. It's capital. It's cash. It's moolah. It's big bucks. It's whatever you call it. It's the Benjamins. When money exists, then the environment in a community changes. Money doesn't buy everything. I'm not saying money makes you a saint, but what money does is it makes that community more viable, more
That's right.
recoverable. It transfers money from the policy, from the carrier to the individual, which is, I'm sure you've seen it up close and personal as you've mitigated hurricane losses.
Yes,
And so forth, and been out
absolutely.
there. And so when you have that, and now you've got, I don't know, 400, 500 houses blown away, et cetera.
Yeah.
Insurance companies from all over the world are paying off claims. That money is coming back to that community.
That's right.
Those
It's
pop-
creating jobs. It's creating
creating
builders. It's creating opportunities for growth, for construction. I mean, it is there. And it also gives you that peace of mind. That peace of mind. Now, one thing, Avon, a lot of people don't talk about it. I know they don't know. I tell my friends who's very established, but they say, oh, no, my Rolex is covered because I got my policy. Oh, that art piece is covered. That Woodrow Nash is covered. Talk about items that normally must be. First, tell what schedule means. Tell them what that means, and then talk about why you need to do that and how they go about getting that policy amended to account for things that you've been blessed to have that's over and above the average Joe type of item.
Great point. That's it. You mentioned, I mentioned earlier that what contents were, just loosely, we said everything not nailed down. And that's the truth. There's not mandatory or good business that someone sits down and write, well, I got 20 chairs and I got 15 pair of Nikes and so forth. No, those are contents that, in the community of people that this whether everyone has it. Insurance companies do advise when you have items of a particular collection, jewelry, watches, furs,
shoes. These shoes are going for $3,000.
I stand corrected. You are so right. I'm showing my age now. I wouldn't have paid $3,000.
But they have collections. I know of people who have vast sneaker collections, huge.
And if that sneaker collection, you ascertain that if I lose this collection, and I'm losing it all at once when the storm comes through, it doesn't say I'm going to take the cheap shoes and leave the nice shoes.
That's right.
And I stand to lose $5,000, then you best do what we call attempt to schedule it. Schedule means itemize it, meaning a particular value is placed on it. Generally, it's either going to be by sales receipt or by some sort of evaluation that took place, like someone who could evaluate and said, that is a Rembrandt. Well, you wouldn't have
an appraisal. Yeah.
An appraisal is done, and the insurance company will look at that appraisal and say, okay, it's done, certified by a known person, good appraiser. And thereby that item now carries with it that amount of coverage, and that type of thing will add to your premium. But then again, you've got the peace of mind knowing if that fur coat mysteriously disappears, that's another word in the policy. You don't know how it's gone, but it's gone, then you can have coverage.
Now, let me ask a question, though, especially on artwork, and I love Woodrow Nash. And so if a piece of art is scheduled for, say, $10,000 in 2024, in 2029, it might be worth $40,000.
Wow.
How does the policy account for that appreciation and that growth? Or is it the responsibility of me, the owner, to get every 5 years or something, an appraisal and get it re-upped?
It is the responsibility of the appraiser, of the owner. But however, with that, back to that professional agent, whoever that put that policy there, he or she knew when that this person had something of great value, $10,000, it should have been noted somewhere in the file. And then they know that every several years, call them and says, hey, how you doing? What's the value of the artwork right now? Because it could be that the art really ballooned up. I've heard of that happening.
Yes. Oh, yeah. You pray that it does.
Yeah. The artist is no longer living, et cetera, and so forth. And then there are specialty companies that will insure certain items beyond an insurance policy, the average homeowners, and a homeowner's policy will let you know that. They'll say, well, look, this is as far as we can go up to this limit in this area, whether it's in the jewelry or what have you. And so you then be obliged to get insurance from specialty carriers. For instance, you mentioned that artwork. Suppose you had a nice couple of acres out in the country and you happen to have a horse or two, and that horse happened to have just won the Belmont.
That's right. That's right. So it's not just content being a physical item. It's cattle, it's crops, right?
Yes.
All of those things
Yes.
are insurable.
I was going to bring that up on other discussion. That, of course, we talk a lot about the life insurance, the health, and the personal property coverage, because that's so pervasive. It's so everywhere, But there again, insurance is placed. There are NFL players that have insurance. That
On
covers
their feet, on their legs, on their arms, on their
on their
body.
ability. Oh yeah, on their ability. And
Okay.
then there are employees. You and I were talking about that want to protect their income.
Yes.
That says, if I'm disabled, if I'm unable to do what I do, whether I am the great wide receiver for the Kansas City Chiefs, or whether I am a great contractor working for a great GMS company, then how long do you think that company, the NFL team's going to pay you?
Yeah, if something happens.
Yeah. So that's where that disability, and the first leg of financial planning, honestly, is disability insurance.
Well, that's key. That's key. Well, how young should you be to qualify or to put in disability? We've had this conversation. How young for especially disability? Do you think you should get it right off the onset when you start in that career as a football player, as a business owner?
I do. Because you'll never again be age 35. You'll never again be age 45. And it's insurance of this nature starts with, how old are you? That's first question one. Then you move to, are you a smoker? Non-smokers. Then now we're starting to look at the risk. If you are age 50 and you're a smoker, you will pay substantially more than a person age 50 and a non-smoker.
How do they classify marijuana now?
Oh my goodness, you got me in the weeds. Literally speaking.
Listen, you got a lot of people that's listening that's 420 friendly. So how is marijuana classified when you talk about smoking and non-smoking? Because it's not nicotine, or is it nicotine? How are they doing that? Certain
carriers have different definitions or restrictions, or I would say restrictions or qualifications. I've heard of carriers, I'm speaking there of life insurance in general, that categorize you as a smoker. I've heard of, even you speak of the marijuana part, that, well, what about cigar?
What about vape pens?
And so forth. Those are categories, so to speak, that some carriers will give you a break on, saying, hey, you're smoking pipe or cigar, you don't represent the same risk as a cigarette smoker with the tar nicotine, et cetera, et cetera.
And what about that vape pen now?
I'm not clear on how they handle that. If you declare, well, I said declare, the application has the question, and they say, Mr. Client, do you smoke? Only my vape pen. Well, the representative has to click off and put down, yes, he does smoke, but it's a vape pen.
Okay.
The underwriter may ask a question about that directly to the client to determine usage.
Okay.
And so, these are now social questions that have come to play that weren't there 20 years ago, as many states and areas, locales legalize or decriminalize the activity of smoking cannabis, marijuana, and some carriers are lenient. I spoke to one carrier some months ago, and they said, well, we don't even consider it smoking. I said, really?
In the Twyla Zone, we dive into the multifaceted layers of life, business, and beyond through candid conversations, thought-provoking interviews, and personal reflections. We uncover the stories of empowerment, triumph, and growth that shape our world. So whether you're seeking inspiration, guidance, or simply a moment of reflection, welcome to the Twyla Zone podcast, where empowerment meets transformation, and every story has the potential to ignite change. Let's embark on this journey together. Are you ready? Let's dive in.
Now that should be the advertisement for everybody that's in the 420 state that looks to be an agent and do insurance. Because I think a lot of people stray away from that because they're afraid that they're going to be, penalized. So I'm not, but I'm not a person of cannabis, but I can tell you I have people who are, and I think that they feel that they're going to be, definitely denied. So they don't even try.
Generally,
before we pivot from that to business, I have a question. If you're denied coverage by a carrier, say for health or say for life, is there a certain waiting period you have to go through in order to try to apply again?
Well, generally, the way I have worked with clients over the years that have been denied coverage, or either their coverage was rated, the company said, we will issue this policy, but we're going to charge you $1.75 per thousand versus $1, so it's quite a upcharge. Then I will shop the market, because generally they may be a carrier that will accept that risk. They will accept that person. And I have seen that happen. That has happened more than it has not happened. Some companies are more leaning towards certain risk and will allow it or be able to underwrite it or reinsure it behind the scenes as goes on. So it's not the end of the world, yet some work has to be done. And that person, more than likely, they're in the universe of things, they can find coverage.
No, that's good. So if you've had a heart attack before, can you find coverage?
Yes.
If you've had a stroke, can you find coverage?
Yes.
If you've broken your back or your neck, can you find coverage?
No, I'm just kidding. Well, I'm saying yes, but there's some questions to be addressed with that yes. For the injury, for the person that's had the surgery, how long ago was it? Can we have your doctor's name? Do we have permission to contact the doctor that says, what do you think? Is he going to make it? What are you doing now? Are you. So there's some other questions that go with it. And based on the response to those questions, the medical underwriters can say, I think we can issue a policy again, and instead of charging them $1,000, maybe we can charge them $1.40. And sometimes that upcharge is temporary. I've seen that.
Oh, wow. Okay. That's good to know.
After 4 years and nothing else has happened to you in this area medically, hey, we can remove that. You can apply to say, hey, that upcharge y'all hit me with, hey, I've been 4 years. I've been 5 years, haven't smoked since. Then we're going to want some type of proof, usually medically or from a dentist, to prove that you haven't smoked in 4 or 5 years. And then that upcharge for the smoking can be removed.
Now, that's something I think everybody needs to hear. So if you do go in and there's a higher premium and then you had some challenges up at one point, but then you go to a spurt of 5 to 6 years with nothing and you've moved into a greater realm of health and prosperity, possibly, you can go in and request. Who do they request that with, Avon? Is that the agent?
It should be with the agent, and the agent then generally has a form of some type to submit to underwriting to address those questions. And in many cases, I've seen with most of the mainline carriers, I call it, that I've dealt with, it's 2 years.
Oh, wow.
They encourage that after your second policy anniversary, you can apply. Now, here's the good part to that. Let's say your health did not improve. As a matter of fact, it may have slid down a little bit. They cannot upcharge it anymore.
So great. You're capped at that amount.
That's it.
That they started with. Oh, that's good to know. And then they can go back every 2 years or so to say, hey, please take a look at my policy now. I'm doing better.
Reevaluate. Here's my latest doctor reports. I'm in the midst of that type of report right now. That was submitted on behalf of a client. Hey, look, this is his latest and greatest, all his hits. Now, what would his premium be? And the client, of course, has nothing to lose, so to speak. They already have the policy, so we cannot increase it. All we can do is reduce it.
Now, the biggest word for this first half an hour is what? Reevaluate, right? Yes. Reevaluate. And that's not just you. Reevaluate your life and make sure you got everything covered. Reevaluate agent, right? If you haven't seen your agent in 5 years, 10 years, look for a new agent. And I have to say that because I know Avon has given me amazing service. When I call, he's there. Even when I'm not calling, he's calling. So, and if there's a catastrophe, I travel a lot. My agent, my friend, has come to my home just to make sure my home is still standing, right? And my home had a tree come through it. Remember, Avon, the tree crashed through the house. So
I came to the house because I had to see that for myself.
Yeah, but, my brother called me and said there is a tree in your bedroom and there's a branch and a trunk in the kitchen. And I'm like, what? But let me say this. That policy that Avon put in place had my whole family, including my baby dogs, in their own house, in a beautiful hotel. And for months, 6 months, it took to rebuild my home. And I was grateful and thankful to what that policy did and then what my agent did, So, you got to have a relationship. To me, it's better than anything. You got to form a relationship. Your agent should know what they're doing, but also you should be engaging them. When you do something different, you put a pool in the backyard, you put a big fence in the backyard.
Oh, yeah.
You redid your home and added an extra 2 bedrooms in the back. You need to call your agent and let them know. Take pictures. One thing that I do, and Avon he laughs sometimes, I do a video of my home, every room, all the contents. I just do a video. I walk around and say, this is January 2024. I have it now. It's stored in the cloud. And in the event God takes this home away or some catastrophe happens, I'm going to give Avon my link to my file. And say, look, here's the contents, man. Make sure everything that you see in each one of them rooms, play it in slow motion. Make sure we get it to whoever's going to be that adjuster. And they got everything listed. So it's a safeguard. And it doesn't take any time. We got these cameras now on our hips every day. You have absolutely no excuse. And even with your cars. Now, there's a point of no return where you can add a whole bunch of stuff to your car and you're not going to get it back. I mean, so you got to understand assets that appreciate and depreciate. And sometimes in our neighborhoods that I grew up, they would have cars that's more expensive than the homes that they living in. So you got to make sure you got some stuff to make sense. Everything can't be insured. And if it is, it's going to be to a limit. You want to address that real quick before we do business?
And be too expensive. And these principles that you have expanded on flow through the other areas of insurance also. As business owners, as entrepreneurs, the fact that the camera thing that you mentioned, that's great for you and an adjuster, because you got to imagine that after a catastrophe, and Twyla, like I said, you've been on the ground with hurricanes. It's too many feelings. It's too much up in the air.
It's emotional.
It's emotional. And so here you are talking to a claims adjuster or someone representing the company to ascertain how much did you lose. You can't think of that.
No.
But I got the camera. We all may remember the big item, the big 80-inch television. You remember that I lost. I had one of those, But are you going to remember back to the shoes that you did have 25 pair of Jordans and red bottom shoes? I mean,
that's right. Red bottoms, it. That's right.
I guess the red bottoms you would remember.
Yeah.
But, so those are good things that a client can do to help in the event of a loss. And that also transpires over the businesses. Commercially, you mentioned hair weavers and stylists, and I would dare say nail tech.
Yes, nail tech, absolutely.
These are great income-producing, wonderful men and women, and mostly women, that work to produce that great look, and they do have a good amount of capital to come in. How are you going to protect yourself with that? How are you going to protect yourself if someone says, you did my hair and now I'm bald?
Correct.
You got to have liability insurance. Correct. It's a form of insurance again. You're back to that. Or you as a stylist there, you're standing over people for 20 years and so forth, and you're protecting yourself. But what about when you inhale all those chemicals? They do.
Or your hands don't work and you start to get arthritic or carpal tunnel from that click, 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 and all the little things that you're doing. we're going to talk about business now. I think this is a perfect segue because it is vital. And this is for my entrepreneurs. I want you to pay attention to this next segment because a lot of businesses get this wrong. And, I'm in a business in construction and real estate development that is insurance intense. And not only from liability, workers' comp, additional riders, surety bonds, surety performance bonds. I mean, there's so many different angles, but the most basic is liability, right? When you know, and I want you to address, Avon, some businesses now are running from their home. What do they need as a home-based business?
Oh, wonderful, wonderful. Boy, I wish I had your list of questions before I got it. That's a beautiful question. It really is. And even before the pandemic, but certainly post-pandemic, quite a bit of businesses operational from the home. And then, you can have riders put on your basic homeowners policies to a point. And in some cases, maybe it's best just to have an individual policy that doesn't have a limit. Usually a rider has a limit to how far it's going to go. But here you are working from home. You've got your computers, your 4D printers, and whatever else is germane to you working from home to make it happen. But that's not a part of regular homeowners without an endorsement. An endorsement generally means I have told the company, they have said, yes, we will cover it. It's going to cost you $25 more, 30, whatever, to have that coverage umbrellaed over your activity at home because you're operating a business. And maybe it's not a big business. Maybe you are a music teacher.
Yeah.
You can be a music
teacher. Or a tutor.
You need that coverage now. And if you're doing these things, if you're operating as that individual entrepreneur, doing tutoring and special needs teaching, etc., on your own, and you've got the right liability insurance, generally the states that license you will make sure you carry that and you present that endorsement to them that you have this insurance. But now, as that independent owner and that entrepreneur, you need to protect yourself. We talked about your public and your property. But what about the fact that you could put 40 good years in, build up a nice living for yourself, and now you're ready to retire? In many cases, you need to have insurance there going into retirement. You don't want to buy it at age 65. I mean, you can. You mentioned what's the optimum age. If it's not 65, but you can get it. It will, and you can have certain things built into these policies now that turn back into liquid cash without you being deceased or without there being a catastrophic situation.
Yes.
And now you've got cash. Don't forget, we live in a capitalistic society, and I'm not trying to make anybody capitalist, liberal, or whatever you may be. I'm just saying money is good. It is even better when it turns into cash. And because you didn't have a loss, I know some companies say, we're going to reward you. You have accumulated cash, or you have a disability policy that you can now use some of that cash. There are so many things that can be done with the professionals today. And the professional really should be questioning the client and not running in with a one case, one policy fits all, because certainly that's a great segmented part of your activity. Not everyone operates a home from the business, but if the professional representative takes the time to find out that you are operating a business, then they should bring up, well, okay, have you protected that? Are you covered there? Do you and ask those questions? But they certainly won't know if they don't ask or if they don't visit or some kind of way dig that fact out.
I'm a firm believer, and I do think my years of being an entrepreneur and also a corporate owner of a business is that you really do want a demarcation of the line, right? You draw your line in the sand. I'm in my home office now, but there's my clients don't come here. My clients don't come here, and it's a reason, because I don't want them tripping and falling or in my home. And also I want my personal space and my privacy. So a lot of the times I think you want to make sure when you start the entrepreneurship, And that's why you should come to my Success Academy, the Twyla Garrett Success Academy, because we start with that formulation of how do you form the business the right way. And that includes insurance, making sure that you have the right coverages. Because even if you're in an industry that doesn't require insurance to start a business, you need liability. If you hit someone on your way to a meeting, or someone hits you and they don't have the coverage, there is a lot of things that you need to make sure a business runs well. Avon has taught me well, and I'm still learning. I'm about to embark on a huge global journey, and he's looking now. We started talking months ago, Avon, and you said, okay, let me start figuring out what your team needs and what you need to protect your team. And in the event something happens to Twyla or her team, how does the business continue without them at the helm? And so I want the listeners to understand that when you build your budgets, your forecasts, your perspectives for the year, if these categories are not in it, you have a problem. Yeah. And I'm doing that now. You know, I go back and I say, Avon, how much you think this is going to cost? Is this $10,000? Because I need to build it in. So now you can price your product the right way and cover yourself for the future. And you said one thing, you said, Twyla, if I had these questions, I on purpose wanted to make sure, because I know you're an expert. And I also wanted to make sure we just had a dialogue. Yes. A lot of times when people talk about insurance, they get afraid, they get scared. And our dialogue, not just as friends, but I'm your client, right? So at the end of the day, these are questions that if you were in my seat as a customer and Avon was your agent, today I wanted to surprise him with all these questions, because Avon knows these are the questions I ask him anyway. When he's sitting at my dining room table, I'm like, wait a minute. Are you saying I need to do this, that, and the other? Or Avon will walk around the house and go, Twyla, how much is that? I remember you did that for one of these paintings, right? And I said, man, I got this out of Cuba and blah, blah, blah. And you were like, and it was commissioned. And then immediately he was like, you need to get that scheduled. So to know that your agent, a good agent, is going to become your friend and they're going to be your partner, So I don't deviate. A lot of times they say, well, you need a different agent for business. I don't need a different agent for business, because what I do, I need a good agent like Avon who knows how to do both or find the answer to the other question on the business side and combine it together. So I'm talking to one focal voice and that person knows where I'm at. So talk about that, Avon, about business and making sure that you have that one voice that's looking at the whole perspective, and how early you should bring them in to your business to start shaping what you need.
Well, thank you for the great commercial. I had to stop and look at myself. Is that me? But you are so correct in that we as professionals, we go through the classes, the training, etc., and no one can know it all. So we do have a team. I have a team behind me, and we cannot be afraid of calling a team that's part of the team that specializes in the healthcare industry or in the liability industry and saying, I need a very good workman's comp quote for this type of situation. And so that they can put that together and draw upon the expertise of other teammates, but also other professionals such as accountants and attorneys as we go forward, and develop that relationship of just communicating, saying, and finding out about your clients. There's certainly, we're probably thinking as a professional, well, I don't have time for all of this. Well, yes, you do. You don't have time for everybody every day, but that's not what we're speaking of. Everyone has an anniversary or a renewal point to their, whether it's a business liability policy, workman's comp, it renews itself. That's a good time on renewal to say, let's take a quick look, or let's have a quick conversation, blah, blah, blah. And now with financial planning, we're not saying look at a portfolio of investments every day, because your eyeballs will cross up trying to keep up with the ping-pong ball of what's going on in the market. But we certainly need to look at trends. And for these entrepreneurs that budding and growing. I'm excited when I hear of people that are going into their own business, following their dream, using their craft and skills. Sometimes it's what we used to call the gig economy. You have a full-time job. Thank God. It's wonderful. That will provide you certain things at work. But you have this other career, this hobby, this avocation that you hope to grow to some point economically. Then let's talk about how we're going to grow this. How are we going to protect it while it grows? It's your baby, and you're going to protect your baby. That's what you're going to do. And at some point in time, your baby is now full and mature and is launched out of the house. Like right now, it's graduation season. Many people are launching out of the house, coming back in. But when that happens, then you're looking at, well, I'm going to market and sell this business opportunity that's been good to me to someone, somewhere. Here's where the professional planners, again, should be working in conjunction with you, the owner, with perhaps whoever else is part of your business team, getting certain information out of tax consultants to give back to say, what's that business worth? Or coming up with an approximate good value on that business before you have to have that statement, because Uncle Sam will give you a price. It's funny. When you're building a business, you know, I can see it as being, okay, I'm building a business. It's going to be worth $20 million. I'm doing this, I'm doing that, and so forth and so on. Uncle Sam is listening saying, oh, really? Well, I'm going to tax you on $20 million. You know, but this is the role of your financial advisors or your financial team, and then their specialties. And I do oftentimes, even this week, work with the other members of my team with the client, and they're running the ball, so to speak, on their particular niche expertise. And I've always felt so well supported in my industry and in my career that I can pick up a phone and call someone in the cloud, someone of higher, deeper authority, like I spoke with earlier, to say, you need to navigate 3 or 4 degrees to the left on this one. And they're usually spot on. There's someone that studies it. And so all of that needs to come back and to bear in the client-professional relationship. That's what you're saying. The professional is there honing their skills, not so much as being glib at tongue with the old-fashioned used car salesman checkerboard shirt on and everything.
Right.
Not that, but just finding out information and finding out and pointing out to your clients, as you know, like I said, this person is going to be doing the overseas work. Well, let's see what are some of the things they may have thought of or may not have thought of that need to be protected, insured, or rearranged in some fashion, you know. So, yeah, that relationship between the insured person, being the individual, that's wonderful, or the individual with a business, or the individual with a family. And certainly at some point, all of these things have come to fruition, and these assets, as you in the accounting industry know, I have a certain dollar value to them. And now it's time for me to exit this planet, and I'm no longer here in my physical self. These things stay behind. In comes the assessment from Uncle Sam that says all of this stuff was worth $5-10 million. And you say, really? You know, and I'm going to tax you on an estate, which we don't have time for this evening.
No, we're bringing you back for estate planning. I'm definitely going to have you here for that.
You'll hear a lot about that because a lot of America is beginning to have some of the same features I have, which is known as gray hair. And we're creating on out. And so we will be transferring wealth. What you hear now in the ivory towers of all of the successful wealth planners and so forth is the transference of this wealth over the next 20 to 25 years. They know the whole landscape is going to change. People, that's natural. That's natural. You're not going to stop that. What's left behind, that's what we're talking about protecting for future legacy or generations, if you would, to whatever you conceive it to be. If you have a big family, most of us think of somebody in the family, this, that, and the other. But in some cases, it's a worthy cause. It's a philanthropy. It's you have, for instance, you got the Twilight Zone. You've got other things you
Yeah, I got the Garrett Foundation. My foundation is there. And I also have trust. We have trust that's put in place to do what they need to do.
Yeah, and the funding of those trusts and those foundations, meaning some dollars have got to come from somewhere, or should be. Sometimes they are placed there by the assets that were left by the owner of those assets, saying, I'm going to push this over here and put it there. And oftentimes, here comes that good old insurance policy again that you pay for with your premiums, pennies on the dollar, but it's considered that now it's paying off $5 million of coverage or $2 million or whatever that is. These are things so that benefit the community. And so some might be listening saying, that's too high up for me. Don't worry, because all of us are familiar with someone has passed on. I've unfortunately a homegoing, as we call it, next week of a dear lady friend at church, et cetera, et cetera. Excuse me. We can't stop that. But then we look at the cost of what does that family do to make sure that person receives the dignity that they lived with in the reference of their services that are offered. A funeral. What's that about? Well, I've heard people say, I'm not going to leave all that much money to benefit that wife. She married somebody else. I said, okay, no need to talk to you.
Right.
I told one yesterday in jest. I was merely jesting, Twyla. I love to stick my humor.
I know you do.
And I said, if you really are kind of that person that's a little jealous of Mrs. So-and-so, and you don't want to think of leaving funds behind that somebody else might enjoy. I said, look, if you left her enough money, she won't need Jody. She'll be independent. I said, drop the mic. Boom. So don't hand me that. But these are usages of insurance. And what's about to happen, December 31st, 2025. Sounds like a long way off, but time rolls.
No, it'll be here soon.
It'll be here real soon. On the books already, on the legal books of the IRS, et cetera, everywhere else, a lot of laws in regards to estates
changes.
Sunset.
They
meaning
sunset.
They're gone.
Yep.
And so all the calculations that were done under those old laws, those laws that to benefit my trust and my family and my business and so forth, and they better be reevaluated to see how they're going to fit under this new law.
Now, do they get grandfathered? If they were established prior to, will you be grandfathered?
Some parts of that is grandfathered. That's where you'll need the expertise of what should be going on now, consulting and looking at those assets, those trusts, and the documents and what's proposed as what the law will be January the 1st, 2026, as it reflects on those documents. Am I grandfathered here? To what extent? To what, it's better to be prepared than to be running to try to catch up, because once the law changes, it's done. And, now they do in court, then judge hits their gavel, it's done.
Well, I think it's so many people that's going to be affected. It's probably going to be another gavel that somebody else comes up with some more laws to try to either extend or move it into a different realm. I mean, right now,
that's for sure.
The political climate is a little touchy. We don't touch it on the Twilight Zone. But one of the things that I do know is we just touched the surface today. I mean,
yes.
While we talk, personal, we've talked business, we've talked, moving in and when you need it. There's a whole nother segment when we got to have you back for estate planning. What does it look like? I recently, 18 months ago or so, lost my dad. And one of the things I realized is, and I lost my mom 10 years before that, a lot of things were not put in place correctly. And so how do you make sure? And we wanted, look, no one wants, I still grieve my dog and my dad. And so nobody wants people to go.
Right.
And so how do we do it respectfully when we need to start asking those questions, to getting people covered the right way, to even making sure you know what that person has, right? Because I know there's some people who have a whole bunch of stuff and they tell nobody nothing. And how do you go and find, if they had a policy? Is there a repository, or is there somewhere that a daughter or a son can go and say, hey, I don't know if my family had one. Does the insurance agents keep a master repository worldwide that you can look up someone's name and social security number and see if there's a policy attached? Those are questions that I want to delve into, because I know a lot of people just say, oh, well, they didn't have anything. And actually they might have.
Yes, that's a salient point. I don't have an answer, but there is an answer to the question. Is there a big brother depository? I guess now with AI, somewhere similar will be. But at this juncture, and in our community, if I can just put it right there, and we're not talking about the community of billionaires and millionaires, we're talking about the community of many of us are hardworking, middle income or lower, or what have you, income people. Wouldn't hurt a flea, etc. And we tend to be more private. We pull in our community. I understand some of that, but I will speak now briefly as we, I guess, reaching closeout time, to those who have gray in their hair and you happen to be past 50 years old. You're not a Gen Xer anymore or anything like that. Listen, spend that time speaking with members of your family, the closest, or close friends, something like that, or business associates, and saying, look, we need to have a salient discussion. That's all. This is what is on the table. This is what I have. There are husband and wives, and the wife doesn't always know everything. And they've been married 40 years.
That's right.
It just sort of meander along. I know she got insurance. That they got insurance at work. I'm glad for that. Wonderful. Get all of the work you can, all the work insurance or benefits you can, because they generally have a lower premium. But understand something. You don't own that coverage. Whether it's disability or whether it's life insurance, in most cases, you have it. It's called group. You're part of the group. And so you personally don't own it. Now, when you leave there, generally speaking, most companies give you the option to, hey, you want to take this with you? It'll cost you this much money. It'll be now an open premium market. It's not the one that you were paying in most cases. But look at that. Military. There have been so many people coming out of military after 25 years or whatever number of career years, and they don't exercise keeping their military insurance. Excuse me. Now, I know it can be pricey sometimes. So I will tell my service people, compare what the military, we call change of insurance, the conversion of military insurance to personal insurance. Compare that, because no questions can be asked on those policies. They're not going to ask, do you have hearing loss? Or you got the heebie-jeebies? Nothing.
Well, they're not? They can't ask those questions?
Excuse me. No, they can't.
No.
But for that reason, they charge you more premium, because they know they're going to take on some risk. So I tell my potential clients coming out from military, look, compare that premium with a premium in the open market from any other carrier that will ask those questions. And if you feel that, hey, I can pass that. I mean, I'm not dying right now. I don't have any real bad situations. Then you might want to purchase your own, or at the very least, get as much of your old group insurance as you financially can afford.
That's a great point. No, that's a great point, especially in military towns like Virginia, where we're at, and things of that nature. This is a huge, huge one. I know my dad strayed away from the VA because he didn't like the care or the quality of service. And so there's a lot of options there that you can look at. And I think that this point, before you give it up, make sure you got something better. Exactly.
And with that VA piece, that's generally on the health side, talking about you can have these benefits there by going to the VA. I say, well, take what they give you. At least I got that. I got what you give me. Now, anything else you personally want to pay for to add to that, that's okay. But take what they give you. Don't look, give horse in mouth, says Tonto. Really. Because, you know.
Well, which one, Avon, would be primary? How does that work? How did you choose what's his primary and what's secondary?
with as I understand the military, the health benefits we're speaking of now, not their group, the military servicemen.
Nope, the health benefits.
The health benefits. Generally, that can be primary. And some of the policies and plans that are in the military, or not in the military, but that are made available upon retirement from military, will cover you wherever you go, whether it's to a military facility or a private doctor or facility, to a point. And then whatever else you see that point evaporates. And I know, I don't say evaporate, but I know this requires some listening and studying. But listen, people, it's your life, it's your family's financial well-being at stake. Spend the time. I know it reads like Greek language. Have someone tell them, break it down to you. I don't understand it, ma'am. I may be a little slow. Would you say that again?
Well, and one thing you can recommend too, everybody has a computer and a cell phone. If you touch it's a couple buttons you hit and the document will read to you. You don't even have to read it. Oh, yeah. You can put that same document, open it in Word and open it in PDF and have it read out loud to you.
Well, I love talking to you smart people. I learned something. I'm going to try that as soon as I get home.
Yes, you do not need, that's just like how you have a book that reads to you.
I heard an Audible, but you're not speaking of Audible.
You can actually take any Word document, type in the go in the search box up top and type in the word read aloud and hit the start button, and the person will start reading it to you. So if you hate reading, you don't want to read, now what you need to do is sit back with your best cup of coffee or your tea and a notepad and a pen and let it read to you and take all the questions that you have. You can stop it. You can restart it. You can move the cursor back to an area where you want to hear it again. There's a lot of things you can do. And I used to do that when I went to visit my dad and they give him something. I want to read this. And I'm like, nope, let me take your iPad. I'm going to have it read to you so you understand, so you can comprehend.
That's worth the admission, ladies and gentlemen. Y'all go and try that right away. Because I'm certainly going to try it. I really am. And even after getting that, if you have a question, and don't be afraid to call and ask a professional and get them to break it down to you. I tell people, put it where, who should say this? One of the XM radio hosts, put it where the goats can get it. Put it right there. That's what he used to say. Put it where they can understand. If you're talking to your 8-year-old grandchild, help them understand it. Say, well, here's what insurance does. If you stub your toe and it hurts after mommy kisses it, you'll get $2. It's like the tooth fairy.
The tooth fairy, yes. The tooth fairy.
Insurance is your big tooth fairy. And insurance is your partner in your financial world. Insurance is the best friend financially you can have. Get your stocks, bonds, and get your Bitcoin, get your assets, your real estate. Wonderful. All of that depends and revolves around insurance, because insurance is the only thing that becomes liquid cash upon request. Everything else is marketable. My securities are marketable. They are based upon what's the value today. My stock, my bonds, and you've done a lot of real estate. And I am saying, yes, real estate appreciates. But in the midst of a sale,
it's not liquid. It's not liquid.
It's not liquid. So to the audience, I think we all know it means it won't turn into cash real soon. That's all. And insurance, be it with your car, home, house, or your health, your disability at work. If you can get it at work, please go in and try to get it at work. Or if you can get it payroll deducted. Disability pays you when your income stops because your illness or injury says you need to sit down for 3 or 4 months. I know we spoke of death, which is final and you're gone, but that's going to happen to everybody at some point. But what about disability? Where I cannot work. I cannot get out there and do my gig economy. I can't braid 10 heads today. I can't do it. I can't cut 20 yards. I know some people in landscape business, they're knocking it dead. But if you can't get out there, well, some of your employees can do some things, but we all know they work better when you're there.
That's right.
So get that disability to keep your income coming in so you can keep your investments going and everything else. And my computer says I've got 30 minutes left. So I think
That's okay. One of the things I do want to know, and I want you to tell them actually, is how to get to you. Look, I know I love to share, and I want to share Avon to the world. And Avon, I need to ask one thing. Where can they, what states can you write for? And then secondly, how can they get to you?
currently my primary focus is Virginia, North Carolina, Maryland, and the state and DC.
Okay, so DC, so you can do the DMV and North Carolina.
Yes.
DMV and North Carolina. So he has 4 states, guys and ladies and gentlemen, that you can go get Avon White. He is the best. Now, I know even if you guys all go to him, he's still going to give me all my attention that I always deserve. So
yes,
I'm not mad, but I love to share something blessing, and he is a blessing. He has been a blessing. His entire family is a blessing to me, both personally, spiritually, and he's an unbelievable musician. He has the Soul Seekers. We're going to try to get y'all to hear the Soul Seekers on here one day too, which is amazing. Wonderful. I would love to get the Soul Seekers on here to do a little concert. Okay, so he's in the DMV and in North Carolina. Now, Avon, how do they get to you?
Okay, you can call me at 804-727-2684.
Okay, say it one more time.
804-727-2684. Please leave a message. I will respond to you within the day.
There you go. And he will. He definitely will. I will send more information and share more information when we upload this onto YouTube. But definitely, I am in awe and I am thankful, Avon, for your friendship, for your business relationship, for our partnership in life. You have made my last 23 plus years. I think I started off by saying 24, but we met in 2000, and I'm grateful and I'm thankful for every moment you have been in my life. And so everyone, if you hear this, make sure you learn something today about demystifying insurance. It's not complex. We make it complex. We make it complex, and we always put that cost before the value. You need to remove the actual cost before the value. You need to reorganize that and put the value before the cost. And that way you know how important this is going to be in your life. So again, this is the Twyla Zone. We are here to motivate, give knowledge, to inspire. And again, I got a Success Academy that's coming for all entrepreneurs that need to scale their business. Stay tuned for that. Again, I want you to thank Avon White for being, I thank you, Avon White, for being in the studio. I thank you for being a friend and a companion in life and with God and walking with God. So again, you guys need Avon. Make sure you get him. And one more time, Avon, what's your phone number? Tell them.
804-727-2684. And on the email is Avon, AVON, .white@prudential.com.
Okay, that's how you get him. He'll be back. We got to talk about estates. We're going to talk about soul seekers, and we're going to recap about how the insurance has moved. We're going to talk about who's from.
All right. And thank you again, Twyla, for the years of knowledge and friendship that you have shared with me. Even today, when you said that part about making it for you to talk to you, I'm like, what? She's been holding out. You are bright, you're very intelligent, and you don't mind sharing. And the world is better because you're here in it and you're sharing the way you do.
Thank you, Avon. I appreciate you. All right, guys, we are out. See you again on the Twyla Zone. And make sure peace, love, don't hurt nobody, don't harm nobody. And make sure that when you wake up tomorrow, make the day better than it was yesterday. Have a wonderful day.
Thank you for joining us on this episode of the Twyla Zone podcast. We hope you found inspiration, insight, and a renewed sense of empowerment. Don't forget to subscribe to the Twyla Zone on your favorite podcast platform. If you have a story to share, a topic you'd like to explore, or simply want to connect, we'd love to hear from you. Stay tuned for more empowering episodes coming your way. Until next time, embrace your journey, embrace your power, and remember, you are capable of incredible things. Take care and keep shining.